CBDC Assets channel back up in it once again. XRP focus, but crypto regular. Today, we're going to be talking about some CBDCs and the problems with Bitcoin and the bubble that will inevitably bust. Hope you guys like the video. Have a good one. And oh yeah, keep an eye on the indicators for XRP because it's about to blow.
Bitcoin and other cryptocurrencies are booming. People are rushing to invest, hoping to make millions. But despite the utilitarian aspect of cryptocurrency, the investment side is looking more and more like a bubble. So I go back to my old friend when people say to me, why shouldn't I invest in this stuff?
Well, Alec, there's a point at which you should. In the very early stages of a speculative bubble, you could make millions, or in the case of the Winklevoss twins, billions of dollars if you time it right. The question for most ordinary investors is they typically come in very late and top tick the market, if you will. The technology is important.
The technology is great. It's based on blockchain technology, which a lot of smart people I know say is really important in the world going forward. But that's different. Investing in the technology and believing in that technology is different from saying I want to buy Bitcoin as an investment. Now, it does work transactionally. There are instances in which using Bitcoin to conduct a transaction, not just an illicit transaction, but there are some legitimate transactions you can do.
And look, in some countries like Zimbabwe, Nigeria, Venezuela, China, Russia,
work elsewhere,
or you want to get money out of the country, you may use Bitcoin as a transmission mechanism to get into dollars, euro, or yen. If you just want to get money out of a country where there are capital controls. But again, the underlying technology is going to be used widely by central banks and financial institutions to bring down the cost of doing business around the world.
That's what the benefit.
And that's the benefit of the underlying technology. There are now hundreds of so-called cryptocurrencies, digital currencies. We don't know if one is better than the other. It's very difficult to assess at this stage.
And some of them, by the way, are going for under $1.
Oh, there is stuff that's selling for 9 cents or zero. I mean, you know, and so, yeah, if you're going to take a couple $1,000s and take a flyer on it, you also have to be prepared, as you said, to lose that money. I think what's interesting about this is that the adherents have a religious zeal.
Absolutely.
The notion that somehow maybe Bitcoin replaces the U.S. dollar as the reserve currency in the world. 65% of global economic transactions are taking place in dollars. You still have to translate that Bitcoin into dollars if you want to use it for the most part. So it is a speculative effort at the moment. Central banks may decide to go digital with their own sovereign currencies. We may see a digital crypto dollar in the future. What happens?
The concept of the digital trading of money is not.
It's coming.
That's definitely obvious.
I mean, we already have it, right?
Whether or not you should buy Bitcoin because you think it's going to go up and keep its value is a different discussion.
Yes, look, there are people who say it's going to go to $50,000 by the end of the year, which is unlikely given that we have a couple days left. Some people say it's going to $500,000. Others still say it's going to $1 million. You want to make 50 times your money, you put in 20 grand, but that 20 grand can be zero. And we've seen legislative actions and regulatory actions by governments who have outlawed the trading of Bitcoin-related stocks. Israel did this today.
And Israel, the regulator in Israel actually said, I think it looks like a bubble, smells like a bubble, acts like a bubble, and feels like a bubble.
All right, I want to move on to crypto. You are focused on the cryptocurrency industry. And here, Chair, we've got a lot of questions. Online places for people to trade without middlemen, raising some concerns from the Securities and Exchange Commission. I'm talking about DeFi posing risks as it essentially allows users to operate without ever taking custody of their funds. The Securities and Exchange Commission looking into potential fraud in relation to unregistered digital asset offerings. What do we need to understand about digital asset trading platforms, and where is this going in terms of the potential digital dollar?
Well, again, we focus on investor protection. We're neutral about technology, Bitcoin, and the other crypto tokens. I was honored to teach a bunch of this up at MIT before I took this job. And they're innovative technologies, but at the same time, we're not neutral about investor protection. So if somebody in a project is offering a security, they should come in, they should register, and these so-called decentralized finance platforms actually have a lot of centralization. There is a group of entrepreneurs that are running these platforms, and they should come in and, to the extent, work with us and get registered.
Well, I guess what I'm looking for is, you know, the Bank of International Settlements. Well, I guess what I'm looking for is, you know, the Bank of International Settlements. The Bank of International Settlements issued a report last week saying that the central bank digital currencies could expedite cross-border transactions while bringing down their cost. The central bank digital currencies could expedite cross-border transactions while bringing down their cost.
How can any of us out here not get excited when we hear this? Anybody who's done a little bit of research into Ripple knows that that's their whole goal. Moving money faster and cheaper than anybody else. Listen, I know what I'm holding. Do you? I'm trying to prepare my family for generational wealth.
But is it fair to say that a digital dollar is coming?
I'm going to leave that to the Federal Reserve and Treasury and Congress. But I think that these innovations have shown that we all want
Listen to the man. Listen.
Our payments to be faster and less costly.
Cryptocurrency transactions becoming more mainstream in the real estate sector. Our next guest recently made the decision to allow cryptocurrency deposits on his condos. Joining me now, co-founder of 11 Hotel and Residences, Mark Roberts. Mark, what's going on with this? How many deposits have been made in crypto so far?
Well, our first 10% deposits were taken before we announced that we were taking crypto. We are now about a month away from collecting our second 10% deposits. We had tremendous response and indications that we'll be getting. I would say we're going to be around the 10 to 15, maybe a little higher percentage. We have a lot of buyers from all sectors, and the enthusiasm for crypto, especially coming off the conference in Miami, has been really astounding. I think that the whole movement is trending towards more buyers paying in crypto, and we're very excited to be the first people to take cryptocurrency for deposits on real estate. We're the first club in the country with our Club 11 to take crypto. And I think that it's going to be a wise move, and we try to pioneer in all facets. And I think this is going to be one of our greatest decisions.
When you get the deposit, though, do you immediately liquidate it out of crypto to remove the volatility of the digital currency?
Well, like I said, it's all so new, and we're studying, and we're trying to embrace the movement. And deposits are probably, like I said, 30 days away from taking the second deposits. So we're studying all that. We're dealing with legal counsel. We're dealing with our accountants. And we're having a lot of meetings, and we'll have a real solid game plan by the time we take our second deposits. But like you said, there is volatility. Just from last week alone, crypto's up 20%. And it's also new, but we're very excited to learn about it, and we are definitely embracing it.
Mitch Rochelle, jump in.
Mark, here's my question. Clearly the use case for blockchain and crypto makes a ton of sense in the real estate world. The amount of transparency, the dealing with documents, it certainly makes sense. But I think back, dozens and dozens of years when the residential real estate market was resisting shifting towards multiple listing for a variety of reasons. Do you think your industry is prepared to adopt emerging technologies, or are many of the participants sort of still stuck in the dark ages and will never embrace something like crypto?
Well, I think this time it's a little different, because what I do personally, and my partners, Michael Simpkins and my partner, Dennis DeGorio, and we have a joint venture partner with the hotel in PMG with Ryan Shear. What we've been doing, and I've particularly been doing, is we speak to a lot of people. And people, the younger people especially, all you hear about is crypto. They're embracing crypto. A lot of these people only have crypto wallets, the younger generation. We put maybe 12,000 people a week through the club, and I try to talk to as many of our clients as we can, and they all seem to be talking as crypto, and all they want to do is pay in crypto. And I think that those that don't embrace this are going to be left behind. I don't think this is like something that's going to stop. I think the momentum is too strong. And like anything else, we're trying to be pioneers and be at the forefront of what's coming next. And I just think the people don't embrace it, study it, learn it, or be left in the dust on cryptocurrencies.